All right, welcome everybody. Doug here with the millionaires.how. This is the stock market weekly review for the 21st of September. Yeah, took a couple of weeks off from these weekly reviews. I've been traveling overseas, so now I'm back and I'm back to doing some of these videos. But it didn't matter. The whole time I was gone, over $10,000 worth of gains traveling on the road in a couple of different countries. And that's what makes stock trading the greatest job in the world. Very few careers where your income travels with you, and we have that luxury. So if you're sitting there, man, and you're trying to get to that elite level and you want to travel, or you just want to have more time and more freedom, and you really want this thing to work for you, visit the millionaires.how. Take a 14-day free trial to our live trade room. Let's talk a little bit about the SPY. What a crazy, crazy week. And it's a good lesson for people that are new, and just a good reassurance lessons for all the people that's been trading for a while. This game has always and always will be 100% emotion driven. You can tell by all of this hype that was leading up this week to the Fed announcement. I mean, there was so much emphasis placed on this whole Fed rate hike, and it just got overblown, and everybody got so wrapped up into it. People watching futures at like midnight, 2 o'clock in the morning, seeing how China opens, just totally getting so over emotional. You don't have to trade like that. If you're trading like that, man, you got problems, and you got to get rid of that, because if you have too much emotions, you're always going to lose money. And it shows that, you know, the whole game is like that. People chasing this move after the Fed said they're not going to raise rates. Market shoots up to 202, drops before the end of the day down to 200. I mean, people are going everywhere. You don't have to do this. That's not what we're in this job for, is to create drama and stress. Stress-free trades. If you don't have an edge, you don't do it. Because if you trade with an edge, to me, it's not gambling. That's what we teach at the Lincoln List. It's not gambling if you've got an edge. If you're out there guessing and you're trying to play earnings and say, hey, I think this is going to happen, or you're doing something like that, that's gambling. But when you see a good setup and it's part of your process, that's not gambling. You're trading with an edge. Not all it's going to work, but you have an edge. You don't have an edge and stuff like this. And I don't even know why people trade it, but it just shows to show you. I got a little off topic, but it goes to show you guys, man, this is 100% emotion, and that's how you make money, is feeding off of other people's emotions. Because if there wasn't fools, hate to use that word, fools, idiots, whatever, but they are. You know, if there wasn't idiots chasing this thing to 202.81, there wouldn't be great short opportunities, and it goes both ways. Now, going into next week, let's just think about what we've got here in the market. We're still a little undecided. You know, we got another flush here today on a Friday, kind of a selling day. You got a couple of support areas, I say short term. You might get a little help here out of 194.28, let's say 194. And then again down into this level here of 190. So these are going to be a couple of important levels to watch, you know, how this market reacts to that. It's obviously not the market that maybe if some of you started trading a couple of years ago, it's not the market you're used to. You haven't seen anything like this. It's probably, you know, we talked about it in many of these recaps. You can go all the way back months and months. We talked about the importance of 204 and then ultimately down here to this 183. And I think we're starting to see possibly a correction phase coming here in the market. How deep? Well, that's not up to me to decide, but you're definitely seeing a different type of market here. But pay attention as we go throughout the week. This 194 is down here, and then this little level here of 190. If those get broken and you see a little bit more red days, then maybe we come back down and test 181, but one step at a time. You know, pay attention to these two numbers here. One's really close by, so it'll be interesting to see how that works out Monday. Now, regardless of the market, there's always going to be great stocks. There's always going to be volatility, and there's going to be good opportunities in both directions. The account killer of this week, for a lot of people, I'm sure, was CANF. It's the single-digit stock going stupid. This from $2 to $8 and so on. You've seen this before, and if you haven't, you're going to see this a lot. You know, this goes back to the VLTCs, jeans. I mean, I could keep on naming tickers. There always seems to be one every couple of weeks. And for the new people out there, do yourself a favor and don't bother trading this. Maybe you get it right, and you're going to see a lot of people on Twitter, you know, or social media, tooting their horn, saying, man, I nailed the top of this, I'm shorting this. That's great. You know, that's great if people can do that, and a lot of these people have a lot of money, and you can afford to do that. But for people on small accounts, this can kill you. One bad trade like this. If you didn't think people blew up on VLTC, PBMD, you know, Gene, GENE, some of the OPHCs of old, you know, they do. And people probably blew up here on CANF, and that's what I guess what I'm trying to say is, yes, we all know that this stock is probably going to be $2 in a couple of weeks, right? We know that, but you're sitting there trying to time when this thing could go to 15 or 20 before it actually decides it wants to do that. You just never know. Looks like you got a little bit of a pull here. For me, in this situation, the way I would approach it, which is not for everyone, is you've got so much space on this. You've got a front side and a back side move. You got the front side when it's got all of the attention, all the momentum, all of the talk, and all of the hype, all of the volume. And then you'll have the back side where people stop talking about it, the news story wears off, the thing starts to fold. There's so much room to the downside. Look at a chart like Digley, DGLY, Lake, LAKE. You'll see what I'm talking about. There'll be plenty opportunities for you to collect large on the short trade without you having to go into the front side and predict it, if that makes any sense. Because you can, if you're going into this stock to trade it so you can scalp 30 cents, you're out of your mind. You're out of your mind. You're going to lose your account. Don't do that. So there's plenty of backside. What you need to see is a couple failed attempts. If this thing can break out maybe a little bit on Monday, get back up into the 650 areas, or just bounce at all, that bounce gets rejected, giving you a pivot somewhere where you can control your risk, then that would be a pretty decent short play, using the stop as high a day or stop above that pivot, controlling the risk, rather than just going into this here. Yeah, it did fade. This is a great ramp, but these little low float squeezers like this, it can get out of control versus something that's not such a lower float. But anyway, let's move on to something else. Decent little chart. Looking to let me just actually, since I got off on a rant, I would like to short this, looking for a couple of pivots, just like I explained, rather than just trying to top ticket. Now, this KITE, some of these bios, they're really strong still. I mean, they kind of led the charge. They've been leading the charge. They took a hit in some of the market dump, but even though the market was folding today, we saw some great performers, and one of these coming back into the mix here is KITE. Definitely a stock that was hammered from highs. I got chicken scratch on this. I'm sorry, this looks horrible, but you got this nice little drop, and it's just slowly been building and building. And this is really, really nice. If I kind of open up the daily chart down here at the bottom, look at this. You're right at some really, really good resistance here. So let's use 66.43, 66.50s up here where it's sitting right here, 66, 67 in that area. I think if you start to see a move there early, there's probably a pretty good trade there. There's probably going to be a nice little breakout trade that could get you a good 50, 60 cents on a quick move. There also could be the situation where it kind of just lays flat around the 65, 90s. I think if you stay in the upper 65s and then you build a couple of bases intraday, then you have an opportunity for this thing to build some momentum and start going from possibly red to green. I think the red to green trade in this case would be a lot better if it was to just kind of shake itself out for a couple of minutes early. I mean, sometimes it's what these stocks do rather than breakout. They'll either, when a stock looks like it's at a good point here, it'll either break out early, and then people will chase into that move. And if you're going to take that trade, it's got to be short for a day trader. I mean, that's just a quick hit. I think the bigger trade would be a good base, a nice intraday setup, and then a break through that, giving you a much more sustainable move rather than what we've been talking about, the emotional move. Now, if it gaps up, just write that off early. Don't go into that trade if it's already up $1.50, $2. Then you're just chasing it. It's a top side of range. Don't do that. If that case was to happen, then I might even look at shorting something like this. But KITE, you got a really nice setup here. We want to watch this to see if we get a nice little move. Also, somebody coming back into the mix here is Fit. This thing hasn't been around for very long, but it's already got some cult status to it. So it's been really strong over the last 3 days, and you're up here into some resistance. You're up here and you're in a really delicate area for it. But as I said, you got some cult status here that I think this stock has that could make it go a little bit higher. For me, I want to approach it the same way as I was looking at KITE. Right here, I'm not interested in it because you've already come off of the bottom. 3 days ago, 4 days ago, the stock was in the doldrums, was terrible, was just junk. So it's amazing what 2 to 3 days can do to a stock. So you've got 3 really, really strong days, a good move from 33 to 40. So you've got some good price change, and you're up here into resistance. So If you're going to long here, you've got to be careful because you're late. Really, really late. So, saying this thing is just going to continue to go green to 45 to 50, that's not going to happen. It's going to have pullbacks. It's going to have red days and such. So I want to see something here. A couple of different strategies I would use. One, gap up, short it. It's just like kite. If you're going to gap up and you begin the day at the top of the range, a $2 to $3 emotional move, go short. Just get short on it for a nice little flush. If you gap down, you want to look for a couple support areas close by, roughly 39s. Some of these little areas right in here, especially if it breaks this early. Gap downs, possibly looking for some reversals. And then other than that, you're looking for some intraday patterns to build where you've got some support like this, where you can build some strong levels of support and get you some defined areas of risk, and then see this thing kind of gear up a little bit. I think it has a little more room into it. You can possibly see this thing make it to 44s, although I'm not so sure it's going to happen just in this kind of pattern. It's probably going to need a couple of days of a pullback, but I want to watch it. As I said, it has cult status, so you kind of have to keep that in mind. It can do whatever it wants to do, and we'll see what happens on Monday, right? Blue, another one here, just in the little biotech space. This is kind of like kite here. You got a nice little, this thing's been struggling, pretty much the whole entire month at that 139.50, and finally cleaned that out, late in the day. And when you do this, it's kind of the same with all of these stocks. It's a good setup here, but I'm not 100% trusting in these stocks that, hey, every long, if you're looking at a market like you had today, it's getting smoked. You got to be cautious with your long. You see some green, you got to take it. You can't sit here and just ride these out and grind them. It's not what it was 2 to 3 months ago, where you just got those grind out stocks. If you get some green, you got to take it, especially if you're on the long side because you're not sure. I like the breakout here. You got the 50 moving average slightly overhead. There could be some resistance at 144.61. We want to pay attention to that. Gap ups, big moves, top side ranges, gap ups, $4 or $5 opening, looking to short. Other than that, just like the rest of them, I'm going to look for some intraday patterns to build. I'd pay very close attention to the breakout of 139.50 area. If it pulls and it's able to hold in this range, I think the stock will remain strong. It'll just be a matter of picking the right moments intraday to make the trade. So I'm going to leave it. I'm just going to leave it at that. That's plenty of stocks, plenty of talking I've already done. And one of the things I want to really just highlight about this is a lot of people are coming into a market they haven't seen. In the last few weeks, maybe even the last month, has probably been stressful for a lot of people. And this is what separates professionals from the amateurs. The people, for all of us, we have to go through that stage where we see a market that we haven't. You've got to be around for a few years, before you can really say, hey, I think I've seen it all. I've seen it, maybe in this case, a lot longer. So some of you are seeing this for the first time, and it can be very scary. This is why you need the education, or you need to be in the team. I always talk about, being in the chat room isn't just sitting piggyback and alert. They get a bad name a lot about everybody's just trying to pitch something or pump stocks. It's not what it's about. It's about educating. It's about learning how something works. Like an apprentice, you're learning how someone approaches their day. Because years ago, that's what I thought chat rooms were. It was a place where people I'm going to walk in there, and I'm just going to be spoon-fed picks, and I'm going to sit back and wait for the lead trader to tell me what to do with my life. That's not how if you do it like that, no wonder people hate chat rooms, because that's what they go in thinking. Of course they're going to hate them. It's more like I said, being an apprentice. You're sitting there seeing how somebody approaches their day. That's what it's all about. It's like sitting there right alongside them. There's more to it than just stock picks. There's scanning, there's thinking on the fly, there's looking for stocks quickly, there's processing information, there's study that you do at night, there's chart work that you do, there's indicators that you're using. You're trying to put all this together in a very quick amount of time. That's why you need it. So for the people that are struggling, or don't sit there and struggle. Don't beat yourself down. If you're having some trouble, you need some kind of environment that can get you to the next level, take a moment, visit the lincolnlist.com. It's free for 14 days. See us trade live. Other than that, if not, that's great. Take care of yourself. Trade well. September's almost over. As always, if you need help, you can always reach out to me for your questions. You don't have to be a member. Just send me your questions at any time. Service at thelincolnlist.com. I'll do what I can to get in touch with you. Have a great week of trading. Talk to you soon.